De-dollarization, gradual shift or overhyped decline. The US dollar share of global foreign exchange reserves has fallen to its lowest level this century, slipping below 57% in 2025 based on the latest IMF COFER data. The long-term trajectory is clear. From over 65% in the early 2000s, the dollar has been gradually losing ground as central banks diversify. This is a structural trend, not a sudden collapse. Historical context and recent data. Dollar dominance peaked near 72% in 2001, shortly after the euro's introduction. Since then, the decline has been steady. In Q3 2025, the dollar share stood at 56.92%, the lowest level in decades when adjusted for the IMF's new 2025 methodology that imputes previously unallocated reserves to reach full coverage. Key movements in 2025. Q1, around 57.7%. Q2, sharp drop to roughly 56.3%, largely driven by dollar weakness versus other currencies rather than active selling. Q3, stabilization at 56.92% with minimal reallocation. Total global reserves now amount to roughly $13 trillion. The data points to a multi-decade rebalancing, not a breakdown of the dollar system. What is driving the shift? Several forces are at work. Reserve diversification. Central banks, especially in emerging markets, are increasing exposure to currencies like the Australian dollar, Canadian dollar, and Korean won. The other currencies bucket now exceeds 20% in some periods. Geopolitics. Sanctions on Russia after 2022 accelerated interest in reducing dollar dependence, particularly among BRICS countries. Gold accumulation has surged, led by China, India, and Russia. Valuation effects. Much of the 2025 decline reflects FX movements. A weaker dollar mechanically raised the USD value of non-dollar reserves without mass selling of US assets. Limited RMB progress. Despite policy efforts, the renminbi remains around 2% of reserves, constrained by capital controls and limited global liquidity. When adjusted for exchange rate effects, active de-dollarization remains modest. Implications and outlook for 2026. The dollar still enjoys unmatched advantages: deep treasury market liquidity, dominance in global trade invoicing, and a central role in international payments. No alternative currently rivals its scale or crisis-time safe haven status. That said, the direction is toward a more multipolar system. Potential for higher U.S. borrowing costs over the long run, continued support for gold and alternative reserve assets, gradual erosion of the U.S. exorbitant privilege. Looking into 2026, a slow and orderly decline is the base case. The dollar's reserve share is likely to hover in the mid-50% range, supported by U.S. economic resilience while diversification continues at the margins. Bottom line, the data shows a real structural shift, but headlines predicting an imminent fall of the dollar are overstated. The greenback remains the anchor of the global system, just with slightly less exclusivity than before.